Hey everyone, Casey Demon here. We're talking about tax sales today in the state of New York. In New York, they use both tax liens and tax deeds, although tax deeds are going to be the most common ones used. Now, first things first, a tax lien is a priority lien against real estate that is sold to an investor in exchange for them paying the taxes on the property and hopefully earning interest. Whereas a tax deed is the actual sale of the piece of property for failure to pay the property taxes. Let's first discuss the tax lien sales that are being held in New York. Tax lien sales are held in Nassau County and in the boroughs of New York City. Now, in New York City, the liens are sold in a private manner to specific companies and are not going to be open to outside investors. So that leaves us with Nassau County. In Nassau County, the county basically uses its own laws concerning tax liens. They use what is known as an interest bid down method, and they have a 2-year right of redemption on that piece of property, on that lien. So this means that the investor who is willing to accept the lowest rate of interest in exchange for their investment or in exchange for them purchasing that lien will become the winning bidder at the auction. While the interest rate does have a maximum of 20% per year, the bid down process used almost always ensures that you will never receive anything near that. You can contact the Nassau County Treasurer for more information on how they handle their tax lien sales specifically. Now, the rest of the state does use a tax deed process. This process can vary from county to county, but it's going to be handled by the Treasurer's office. Now, some treasurers will handle the entire process themselves, and other treasurers will prefer to use outside vendors that will take care of the auction process. Now, some counties do also charge buyer premiums. A buyer's premium is an additional percentage, commonly 10%, that is going to be paid on top of the bid, which the county or the auctioneer retains for their auction services. Some counties also charge a non-refundable registration fee, and of course this needs to be factored in to your overall investment to make sure it's worthwhile, especially if you're only going to buy 1 or 2 low-dollar properties. Additionally, some counties even have informational seminars that you can go to and learn all about their process for a nominal fee. You can contact the treasurer directly for tax sale list and their specific rules. And the auction types do vary between counties. They can be live auctions, online auctions, seal bid auctions, or really a mixture of all those. So be sure to read the rules closely. You might be required to register ahead of time, place a deposit in advance of the auction day, and if you're an absentee bidder of any sort, you can guarantee you'll have to replace some sort of deposit. Now, generally, the winning bidder will be required to make a deposit immediately after they win the piece of property if they're on site, and then pay the balance within a set time period. Again, to learn the specifics about the county rules, go ahead and contact the local treasurer's office or browse over to their website. If you'd like to learn more and want to read the state statutes of New York, go ahead to Google and search New York Real Property Tax Law Article 11. I really hope you've enjoyed this video, the breakdown of New York's tax sale laws. For information on other states, head on over to taxsaleacademy.com and click on State Guide. Have a great day, folks. Bye-bye.